Welcome to the What If Ask AI channel. On this channel, we ask multiple AI services what if questions. The what if questions was made back in my childhood when I was asked to put all my questions in a binder because my family was tired of me asking them all the questions I had in mind. Now, later in the future, I'm taking the questions I made from my childhood and asking the AI services the questions and reviewing and judging their responses. I hope you enjoy this channel.
Welcome back to the What If Ask AI channel, and today we're looking at this question right here. What if money moved? As always, I have my two example what if questions that have answers from two of my colleagues just to help give the AI services something that I'm looking for. And the AI services I'm going to be using today are ChatGPT, Copilot, Gemini, Perplexity, and Duck AI. All right, let's get started and let's ask ChatGPT this question: what if money moved? ChatGPT's answer is, that would be quite interesting and it might make everyday life feel a lot more unpredictable. Now let's ask Copilot that same question. I'm going to read this and I'm going to read the first answer. So it said, if money moved, the simplest, honest answer, keeping with the tone of your examples, would be, that would definitely shake things up. You'd suddenly have a world where money doesn't just sit in wallets or banks, but acts almost like a living force, constantly shifting, flowing, and changing hands in ways no one could fully control. Now I'm going to read the straightforward answer. The straightforward answer is, that would certainly make life more interesting. People would have to adapt fast because money wouldn't stay put anymore. Now let's see what Copilot's response to the question is. So this is Gemini's response. Well, considering the way you framed these scenarios, I'd say that would certainly make for an interesting big statement. Though I imagine chasing your paycheck down the street would be a bit of a workout. Now let's see what Perplexity's answer to the question is. So Perplexity's answer that is provided is, that would probably make things a lot more dynamic and unpredictable, and people would have to adapt quickly to keep up. And then here is Duck AI's answer to the question. Okay, I'm going to read Duck AI's answer. What if money moved? If money could move on its own, shifting between people, places, and things without human direct action, here are concrete, plausible effects and mechanisms. Assuming movement follows simple rules, moves towards scarcity, toward perceived value, or follows momentum. 1. Short description of mechanics. Money relates automatically each day to nearby accounts / locations with higher demand or higher recent returns at a fixed small rate. Transfers are visible and traceable but executed without the holder initiating them. Movement obeys supply and demand signals in past performance. It does not create or destroy money. 2. Immediate economic effects. Volatility increases, rapid flows amplify booms and busts. Assets with rising demand see accelerating inflows, others drain quickly. Interest and returns fall toward parity. Easy automatic shifting express yields. Safe assets gain as people flee volatile spots, then leave once returns drop. Liquidity premiums shrink. The advantage of being able to move money quickly disappears since money itself moves. Banking, payment, and contracts. Banks change form. Instead of people withdrawing, money might leave weak banks automatically. Regulators must monitor flows and recapitalize proactively. Payment models shift. Merchants might see incoming payments redirected. Contracts need new clauses specifying whether money's autonomous movement can fulfill obligations. Accounts become dynamic. Banks offer stabilization services, holdback anchors, or glue products that prevent autonomous outflows for a fee. New financial products for in industries, anchors slash stabilizers, services that lock or temporarily bond funds to stop movement for a fee, useful for payroll, loans, or savings goals. Flow analytics and predictive firms. Real-time forecasts of autonomous movements becomes valuable. Arbitrage bots complete to harness predictable flows. Insurance against drift. Policies pay out when money shifts away unexpectedly. Behavioral and social effects. Reduce incentive for hoarding. If idle cash drifts toward higher need uses, individuals and corporations hold less cash. Investment and redistribution increase. Wealth concentration dynamics change. If money moves toward perceived value, early winners can accumulate faster. Countermeasures, taxes, or flow caps may be required to limit runaway concentration. Charitable funding could increase. Autonomous flow toward urgent needs could automatically channel funds to crisis unless constrained. Policy and regulation responses. Flow rules and identity controls. Governments may impose rules limiting where autonomous money can go, domestic only vetted recipients, or require opt-in consent for certain flows. Automatic stabilizers. Central banks introduce mechanisms to dampen destabilizing flows. Temporary flow taxes. Emergency anchors or guaranteed return corridors. Legal changes to contracts and fiduciary duty agreements would need explicit handling of autonomous movements. Fiduciaries could be required to use stabilizers. 7. Practical everyday impact. Payroll. Employers must use anchors or automated payroll or automated payroll routing will be unreliable. Savings. Default saving products use locks. Smart jars redirect drifting fund back to goals. Markets. Short-term speculative trading becomes harder as money leaves poor performing bets automatically. Long-term investments are favored if they sustain steady signals. Summary. One line. Autonomously mobile money would amplify market dynamics, spur new stabilization industries and regulations, alter incentives around cash holding, and require widespread redesign of payments, contracts, and financial safeguards. Now I've had time to rank my AI services, 1 being the best and 5 being the worst out of the 5. And number 5, I'm just going to say is Duck AI. And this is just me personally, but I felt like it gave way too much information. It was a lot to read, in my opinion. But in terms of the question, they covered all aspects of it, but it didn't do it in the format that I wanted, which is kind of like a 1 to 2 sentence that my colleagues had provided. So that's why I gave Duck AI a 5. And then for 4, I'm going to give Gemini a 4. Nothing wrong with this sentence. It is technically 1 sentence. But I guess the thing that kind of like made me give it a 4 was it said that the bank statement would be interesting and that your paycheck would run down the street would be a bit of a workout. Now, I guess I was kind of broad when I said money, but I was talking, when I came up with this question, I was really referring to cash. So that's the reason I put Gemini at a 4, and then a 3. I put Perplexity, and I like how it said like dynamic and unpredictable, and people would have to adapt. That feels like we're doing that almost every single day, but I did like how it gave that in the response, so that's why I gave it a 3. And then a 2, I gave ChatGPT, and it just said like the same thing, unpredictable, and it would be quite interesting, and kind of like the everyday life would feel a lot more unpredictable. I feel like we're going through that right now, so that's why I gave ChatGPT a 2. And then Copilot, I gave it a 1 because it answered my question the straightforward way, And it also did talk about like money shifting, so I did like that as well, like whether it's in wallets or banks. And then, as ChatGPT and Perplexity said, the one sentence, the straightforward answer gave a similar answer where it said people would have to adapt fast because money wouldn't stay put anymore. So again, for my ranking of the AI services, Duck AI is 5, Gemini is 4, Perplexity is 3, ChatGPT is 2, and Copilot is 1. Thank you so much for watching, and I'll see you in the next episode.